So one of the things, and this is absolutely impacting us nationwide, is homeowners insurance. And there's a lot of conversation, particularly after the California fires or the LA fires, particularly, of what about reinsurance? Okay, you have insurance, but something happens, then what? And if you look at some of these places, and right now, this is because we don't have 23 data or 24 data yet. This is all from 23. I expect that we will see Southern California have some more of those dark colors next year because of it. And then you look in Florida, you look at some of the things. Honestly, it's a lot of the coastal stuff. And there's different markets when it has, it's fires and weather, right? And so when that's impacting so much of the country and reinsurance is a big deal, that has a big potential to impact buyer demand and home values. The places where you can't get reinsurance, that's going to have some pressure on home values, because if you can't, a lot of people are not going to be willing to buy a house and self-insure it. And essentially when they call it self-insured, it just means they don't have insurance. They're taking that risk themselves. You can't have a mortgage if you're self-insured, because so much of that, your lender is going to require you to have insurance. So that could shift some of the values of properties to different markets, or reduce some of the values in some of the markets if they cannot get reinsurance. And that is another thing that we have to then consider as we're looking at price, demand, supply, all the things.